Receivable financing. Our objectives for receivable financing are as follows. First, to define receivable financing, then differentiate the types of receivable financing scheme and solve problems for receivable financing. So to begin with the discussion, what is receivable financing? Receivable financing is defined as a financial scheme used by a company for purposes of raising additional cash inflows with the use of its existing receivables to cope up with its financial liquidity and solvency. So, in other words, it is the financial capability of the company to generate additional cash flows using its receivables, either accounts receivable or notes receivable. Basically, when it comes to receivable financing, the most common receivables that are involved are accounts receivable and notes receivable because they are more involved in trading with other parties. So again, receivable financing is a financial scheme, which is a tool to represent the financial capability of a company for purposes of raising additional cash inflows or additional funding. The purpose is to cope up with its financial liquidity and solvency. What is financial liquidity? What is liquidity? What is solvency? Liquidity is the company's state or ability to settle its currently maturing obligations, while solvency is the company's state or ability to cope up with its long-term obligations. Both are actually referring to the company's ability to cope up with all of its obligations. The difference between the two is that liquidity is on short-term or short-run obligations, while solvency is on the long-term or long-run obligations. What are the types of receivable financing? There are four types of receivable financing. We have pledging of accounts receivable, assignment of accounts receivable, factoring of accounts receivable, and discounting of notes receivable. If you're going to notice, the first three are related to accounts receivable and the last one is on notes receivable. Let's start with pledging. Pledging involves serving all of the company's accounts receivable as collateral or security of loans and other borrowings, which means if a company is engaging or making arrangement with banks and other financial institutions when it comes to loan arrangements and other borrowings, the company is serving all of its accounts receivable regardless of the age of that receivable or regardless of the collectibility of that receivable. So pledging all of its receivable as collateral or security. It does not regard the amount of the loan as long as all of its receivable will be served.
So let us have this example. Bilogo Company borrowed 2 million from Cash Cow Bank and signed a contract of loan with the bank as evidence of borrowing on January 1, 2020. The bank extended the loan less 10% interest deducted in advance and is payable on January 1, 2022. The entity pledged all its accounts receivable totaling 2,500,000 as security for the loan. Any collections of the accounts will be used as payment of loan until fully paid. The company was able to collect accounts receivable of 500,000 on July 1 and 500,000 on December 30 of 2020. Yung requirements sa atin is to compute the net cash proceeds received from pledging of accounts receivable, then balance of the loans payable and balance of accounts receivable as of December 31, 2020. So, interpret muna natin yung problem. Si Beluga Company nagbaro ng 2 million kay Cash Cow Bank. Evidence by signing ng contract of loan sa January 1, 2020. The loan was perfected by extending the amount of loan after considering deducting 10% interest. And the loan is payable daw on January 1, 2022. So approximately 2 years yung life ng loan. Then the entity nag-pledge daw ng kanyang entire receivable na 2,500,000 as security dun sa loan. Then, any collections dyan sa 2,500,000 na yan, gagawing daw payment on the loan until fully paid. So, nakakollect daw ng 500,000 each sa July 1 and December 31 of the same year, 2020. So, paano yung solution natin dito? Yan. So, sa January 1, yung face value ng loan natin, 2 million. Bawasan natin ng interest, which is ititreat natin na discount, which later on i-amortize natin. So, 2 million times 10%, that would be 200,000. So, ito yan, 200,000. Difference ng dalawa will be the gross cash proceed natin. Then, from the 1,800,000, magbawas tayo ng service charges and other costs in relation to the loan transaction. Since sa problem, hindi naman nag-provide ng any service charges or other costs related to the loan, zero yung assumption natin. Therefore, yung ating net cash proceed will be equal to 1,800,000. So, journal entry natin will be debit to cash 1,800,000, then credit loans payable of 2 million. The difference will be debited to discount on loans payable na 200,000. Now, for purposes of amortization of the discount, yung gagawin natin dito for 200,000 is we're going to follow the straight line method of amortizing discount for purposes of simplicity na lang. So therefore, 200,000 divided by 2, 2 because 2 years yung life ng loan. Annually, meron dapat tayong 100,000. But since we have collected 500,000 each sa July 1 and December 30, paghahatiin natin yung 100,000 into 50,000 each sa July 1 and December 30 na payments. So for July 1, yung ating collection will be debited to cash and credited to accounts receivable na 500,000. Then, the same amount yung magiging payment natin sa loan kasi nga, any collections will be paid to the loan until the loan is been fully paid. So, loans payable debit and cash credit for the same amount of 500,000. Then, sa July 1, yung ating amortization, debit tayo ng interest expense, 50,000, and credit tayo discount on loans payable, 50,000. Now, for loans and other borrowings, supposed to be, kailangan merong kaakibat na interest through payment of cash. But because yung interest dito is treated as discount kasi nga deducted in advance, yung ginawa natin is to recognize interest through amortization na lang. Ina-amortize natin yung discount on loans payable. Then last, sa December 30, another 500,000 collection, debited natin sa cash and credit accounts receivable, 500,000. The same amount again will be paid for the loans payable until it's been fully paid. Since 500,000, debit tayo ng loans payable, credit tayo ng cash for 500,000. Then last, we have to recognize the amortization of the discount of 50,000 by debiting interest expense and discount on loans payable, 50,000 for December 30. Then, to solve our requirement 2 and requirement 3, na balance of the loans payable and accounts receivable as of December 31, 2020, yung gagawin lang natin is to follow the journal entries and the beginning balance. So, yung beginning balance natin for loans payable will be the 2 million, yung pinaka-face amount ng ating loan. Then, accounts receivable will be the pledged amount of 2,500,000. Then, bawasan lang natin ng mga naka-debits ng loans payable and naka-credits sa accounts receivable. So, for loans payable, yung may mga entries natin na naka-debit are journal entries na nasa July 1 na 500,000 debited and sa December 30, 500,000 debited. Kaya meron tayong ditong deduction na dalawang 500,000. So, yung balance ng loans payable will be 1 million. Then, for accounts receivable naman, we have credits na nasa July 1 and December 30 na 500,000. Sa July 1, credited to 500,000. December 30, credited to 500,000. Kaya meron tayo ditong dalawang deduction ulit ng 500,000. So, yung balance will be 1,500,000. So that's it with our solution for our pledging as an example for receivable financing.